as a school, we took a decision to ensure that we come up with a e-school learning where we have to upload the different lessons on the website for the school so that learners will be updated about the term 2 and as well as term 3 work, because at the end of the year the examination will be there for grade 12 so that it will get assistance in terms of getting different lessons for the term 3 as well as term 2. So today I'm going to do the stock evaluation methods. So at the end of this lesson, I want you to be able to differentiate between a specific identification method, first in, first out method, and as well as a weighted average method. First in and first out, most of the time it is abbreviated as FIFO, others they say it's FIFO. There is also another method which is a LIFO, which is also known as LIFO, last in, last out. But last in, last out is not mostly is not actually taught in the high school level. You are going to get that one when you go to the university. Let us look at this method that we are going to do here in high school. In the second slide, before we proceed with our lesson, let us look at the grade 11's work. In grade 11, we did a periodic inventory system, continuously known as a perpetual inventory system. This system works hand in hand with these two methods, which is with these three methods, stock evaluation methods. In grade 11, we did a periodic inventory system as well as a perpetual inventory system. We are able to differentiate between these two systems. The two inventory systems work hand in hand with the stock evaluation. Let us look at the stock evaluation now. Before we look at the stock evaluation, let me remind you this question. This is a mostly asked question here, even in grade 12. You used to, the examiners used to ask you this question in grade 11. It's about what I'm going to do now. I want to link the prior knowledge with the new method. So that is why first I want to remind you about the difference between these two systems. As I've said that in grade 11 we have learned on how to differentiate these two systems. The perpetual inventory system, which is also known as a continuous, we did this one in grade 10, in grade 9 as well as in grade 11. We also did a periodic inventory system in grade 11 as well. What is meant by a perpetual inventory system? In this system is more complicated. It requires more accounting entries and it is very expensive to run. These type of systems help to discover any discrepancies and as well as errors so that action can be taken. This system helps to replenish the stock timelessly. And this system is an effective in terms of ensuring that we check the theft control in terms of the stock, this system. So the perpetual inventory system, when it's come to the cost of sales, when it's come, why they say this one is more expensive? The stock evaluation or the stock counting, the physical stock counting on this system is done continuously, as it is called a continuously or perpetual inventory system. And as well as the cost of sales, it's also calculated continuously. So that is why they say it is easy to identify even the theft. That is why they say it is expensive, because we must have bookkeepers, we must have auditors who keep on evaluating and calculating the physical stock count continuously. That is why it is expensive to run under this system. But the periodic inventory system one is the cheaper method in terms of evaluating the stock. It is cheaper and simple to operate due to the fact that it reduces control cost, continuous record keeping. So there will be less stock control cost of this one. Why? Because it is done periodically at the end of the accounting period, where we evaluate, we count the stock. Information about the cost of sales of stock cannot be determined at any given time on this method. Inability to control theft activities as cost of goods sold is only determined throughout the counting of inventory. This one is not easy to identify the theft because the counting of stock, the checkup of stock, it's done periodically, which means at the end of the accounting period. This is the grade 11 work. I was trying to ensure that I remind you this work because in grade 12, they also ask this question where you need to differentiate between the perpetual inventory system and as well as a periodic inventory system. Let us look at the following slide. Now let us go straight to the stock valuation method now. It is not all time where dealers can obtain his merchandise at the same price throughout the year. You must all know that. There are three mostly used methods of assigning the cost of sale. Which are those methods? The first in first out method, which is also known as FIFO, specific identification method, and as well as the weighted average method. Let us look at this following slide. A trader can decide to use any one method. The method chosen must be used continuously throughout the existing of the business. Changing from one method to another will produce an unrealistic financial result, gross profit, net profit, trading stock figure in the balance sheet may be over or understated. The Companies Act require a full disclosure of this method being used. Why we must ensure that you follow this as a business according to the gap principle. Why they say you must use method, the one method continuously until the end, because there is a gap principle called consistency. Consistency, where they say you must use one method from the beginning up to the end. Let us look at the first one now, the first in, first out method. The first in, first out method. The stock bought first is sold first. They ensure that whatever stock that they've been purchased first, they must sell the stock first under this method. The system is suitable for any type of the business. Any type of the business can use this method called a first in, first out method. Store dealing with a product which have a limited shelf life may prefer this method. Proper packing, display of merchandise is essential. All stock should be in front. And sometimes others can ask me what type of stock that have a limited shelf life. For example, the milk, the bread, because those type of the stock they last for a short period of time before they expire. So that is why most of those business prefer this method, which is a FIFO method. So in the proper packing is very, very essential, where they have to make sure that the old stock is put in front and the new one is put at the back. Stock values at the year end are realistic, which is also known as a prudent method is taken into consideration there. As a value are calculated at the most recent price. You must ensure that you take that into consideration, that the stock value at the year end are realistic, because there is a gap principle concept that need to be followed, that is followed there, which is prudent concept. Let us look at the example of this first in, first out method. Let's say on the 1st of March, at the beginning of the accounting period, we've purchased 12 units at 5 rand each, which cost 60 rand. And the second purchase is we did another purchase on the 14th of February, we've purchased 16 units at 7 rand each. The total is 112. On the 31st of March, we did another purchases where we purchased a 12 unit at 7 rand 50 each, which is costing us 90 rand. We sold 25 units at 12 rand each, which is 300 rand. This is very, very important. The note that is there, it's very, very important when we are giving an information. There is something that is important, that 2 units purchased on the 14th, underlined it, that 2 units that was purchased on the 14th of February were returned to the suppliers due to those items were faulty, due to the fault. They were returned back because they were faulty. You must underline that. What is required from you? These are the mostly asked questions on the exam when it's come to this so-called FIFO method. Calculating the number of units sold, the value of unit unsold, cost of sales, and the gross profit. And at the end, prepare the trading account in the general ledger. Remember, you need to know how many stock you have purchased. You need to know the prices, different prices, and then you must also know which method that you are going to use when you are answering this question. Which method needs to be used here is a FIFO, which is also known as FIFO method. Let us look at the solution now. How do you calculate this? First, what is required here is the number of units unsold. The unsold one is the one that is on hand. Sometimes they will ask you to calculate the number of units on hand, or sometimes they will say calculate the number of units unsold. So there is opening stock. Why I have to write opening stock? Because sometimes the business can have a closing stock on the previous period. That closing stock will be an opening stock in the following period. So that is why I must write opening stock. It's 0, the opening stock, because we did not have the closing stock on the previous period. That is why it's just a format. So in the case whereby on your activity during the exam, when the opening stock is given, you must ensure that you include the opening stock when you are calculating. The number of units purchased is 40. Why I said it's 40? Because I said 12 plus 16 plus 12, that will give us 40. Okay. And then the number of units that were returned back is 2. So we have the opening is 0, we have purchased 40, and then we return back 2 units to the suppliers. So the number of units that is sold is 25. Remember, the question is calculate the number of units that is on hand, that is within the business, is not sold, is not returned back to the suppliers. And then we have 40 units, we return back 2 units, and then we sold 25 units. So which means the number of units that is on hand is 13. So I'm sure that if you have grasped this, as I've explained it, you will make sure you are going to get this mark as a giveaway mark to you during the examination. Because if you followed the procedure that I gave it to you, it will be a piece of cake to do this, to answer this question. The following question, what is the following question? The following one, we have answered the first one to calculate the unit unsold. The second one, the value of a unit unsold. The value now of that unit that is unsold, which is the 13 unit that is unsold. How much is the value? So the value of a unit unsold, remember, we said how many units is unsold? Number of units on hand is 12, isn't it? So the number of units unsold, how much is it? How to calculate the number of units unsold? You say the value of unit unsold, we start with 12. If the method is FIFO method, let's go back to the information. If the method is FIFO method, that means first in, first out. So which means when we were selling our stock, as we sold 25 stock, we started selling with this 12, and then we followed with 16. If you say 25 stock that we sold, if we sell 12, how many will be remaining? 15. If we say plus 15, that is, and how many will be remaining here? 1. So, which means we sold 12 for 5 rand. We also sold 1 here. We also sold 15 here for 7 rand. But the question is, say the unit that is unsold, and then we said that we have 13 unit that is unsold. So which means that this 12 is not sold, it's unsold. That costs us 750. Which means for us to get 13, which means one that is also unsold, it must be on this 16 unit. Because the method that we are using is first in, first out, which means the stock that we purchased first. The first one is January, the second we sold first. So 1 unit there and 12 there. So let us look at the solution now. That is why our solution will say 12 unit at 7 rand 50. Because that 12 unit that is we purchased at last on the 31st, we purchased at 7 rand 50. And for making 13, which means the other unit that is not sold is on the other one that is were purchased on the February. So the 1 unit at 7 rand because they were costing 7 rand each. Which means this 12 times 7 rand 50 will give us 90, and this 1 times 7 will give us 7 rand, and then which means the value of unit unsold will be 97 rand. That's how you answer this question. The value of unit unsold. The following question, we are required to calculate the cost of sales. Remember people, when we are doing the financial statement, when it comes to cost of sales, that need to be put, the money for the cost that need to be put there for us to get a profit. It's only for those stock that we sold. The sold stock must be used in order to determine the cost of sales. Only the stock that we sold. Not only stock that have been purchased by the business. Because those stock would give us the gross profit. Not even the stock that's been returned to the suppliers, but they will give us the profit. So if, let's say, we are required to calculate the cost of sales. So the first question that you need to ask ourselves is, how many stock that we sold as a business? We sold 25 stock. 25 units were sold at 300 rand. If you go back here in the question, we sold 25 units at 12 rand each, which gave us 300 rand. So the question is, calculate the cost of sales of this stock that we sold. Remember the first in, first out, which means when we are selling the stock, we'll start with the one that we've purchased first, and then we follow with the second one. Which means here 12 units were sold. Here there are also a number of units that were sold there. So if on the 14th there were, for us, on the 14th we returned back 2. On the 14th 1 will remain on hand. Which means on the 14th how many stock were sold there? If you say 16 minus 2 will remain with 14, minus 1 will remain with 13, plus the 12 one that will give us 25 units that were sold. So let us do the calculation now on answering this question. So the value of unit that is unsold now is, the first one is 12, which gives us 16. And the following is this 13, which gives us 91 rand. So which means the cost of sales is 51 rand for the entire items that were sold within the business. This is the cost price for the entire items that were sold within the business, which means we've answered the third question. Now let us answer the fourth one, where we are required to calculate the gross profit. So the formula for calculating the gross profit is always the sales less cost of sales to get a gross profit. So that is why we must put this one. This is the sales. Remember, we sold 25 items at 12 rand each. So which means we got 300 rand for those units. And then the cost of sale, we have calculated the cost of sale with 151 rand. Which means the gross profit will be 141 rand. Which means we have calculated the gross profit. Remember the formula for calculating the gross profit? It's cost of sales, sales less cost of sales, that will give you a gross profit. We have answered the fourth question. The last one, we are required to draw a trading account. Before we draw a trading account, if you are required to calculate the number of units stolen, this is the mostly asked question as well, where they ask you to calculate the number of units stolen within the business. So this is the format that you need to take into account when you are calculating the number of units that has been stolen within the business. This is a format. You said open stock plus purchases minus the stock that has been returned to the suppliers minus the sales minus the stock that is on hand. The answer should be 0. If the answer is not 0, that number is the number of units that has been stolen. Let me give you an example. If they say the total number of units that we have within the business that's been purchased is 500, and then we return 10 to the suppliers, and then we sold 400, and then the stock that is on hand is 80. If we say 500 minus 10, minus 400, minus 10 will remain with 500, minus 10, and minus 400, minus 80, we will remain with 10 instead of 0. Why we remain with 10? Because this 10 is sort of a deficit. Is a stock that we don't know what happened to it. This stock just disappeared. Maybe this stock was taken by so-called thieves within the business. So it has been stolen within the business. So that's how you can be able to get the stock that's been stolen. Because if you say you have 500 stock, and then we sold 10, and then we returned 10 to the suppliers, we sold 400, and then we have 8 on hand, and then we are not supposed to remain with 10, we are supposed to remain with 0. If there's number that is remaining there, that means it's number of stock that has been stolen. Because we know that what we do with the stock, we just return it to the supplier that is faulty. We sell the one that has been purchased by the customers, and then the one that is remaining on hand, it must be calculated and recorded that it's on hand. And then the one that we don't know where is it, that means the stock is stolen. So that's how you calculate it. You will try to answer this question. This is a mostly asked question during the examination. Let's just do the trading account. Remember, people, I said to you, the periodic as well as the perpetual inventory system work hand in hand with this method, so-called FIFO or FIFO, weighted average as well as a specific identification. So let us look at the trading account under a periodic inventory system, where this is a format. If we say we are required to do a trading account under a periodic inventory system using the FIFO method in terms of doing the calculations. So opening stock, we said 0. it must always have a opening stock on the debit side. We put 0 because we did not have the opening stock. Purchases, the value of purchases, the number of items that's been purchased, it's 248. Remember, only the value of stock that has been purchased by the business. And then the number of items that's been sold, the value of those items that's been sold, it must always be credited by the sales, the item that's been sold by the business. Remember, we sold 25 items at 300 rand. It must be credited by those sales. It must always be credited by the closing stock. The value of stock that is on hand, closing stock, is 97. The 97 for closing stock must always be on the credit side of the trading account. And you close off the account with the profit or loss account, where we are checking whether our business is running at the profit or at the loss, as that is our main purpose for starting a business, to generate the profit. So you need to check whether your business is generating a profit or not. This is very, very important. You must take this into consideration. You must note that if there is an opening stock, the closing stock from the previous period, this will obviously have to be sold first according to the FIFO method. So this is very, very important. On this one, we just sold the stock that has been purchased first because we did not have the purchases. But you must know that the opening, you must know that if we have openings, those stock you must ensure that it is the one that has been taken by the consumers first before they take the one that has been purchased before that one, according to the FIFO method. A perpetual inventory system. So remember, I said to you, I'm going to show you a trading stock under periodic as well as a perpetual inventory system. This is the old method. You did this in grade 10, but the periodic one, it was done in grade 11. So we are also going to highlight this in grade 12 as well. Trading account under a perpetual inventory system, which is also known as continuously. It must always be debited with the cost of sales. We have a cost of sales of 51 rand. And then it must be credited with sales. We also have a sales of 300 rand. And then it must be closed off with a profit and loss of how much? 149 rand. And it's the same as that one must have a profit and loss of 141 rand as well. That is all about the FIFO or FIFO